Welcome back, investors, to the Daily Hunt for Multibaggers, your Monday morning guide to navigating the market's hottest chatter. I'm Ethan, your guide to growth potential.
And I'm Brooke, keeping us grounded with the data and those all-important KPIs. It's Monday, October 13th, 2025, and we're looking at the social media pulse from Sunday, October 12th.
And what a pulse it was, Brooke. Our AI analysis flagged a significant number of posts today, quite a few different stocks popping up, showing a lot of community engagement. The sentiment out there seems to be a real mix of high optimism and some cautious undertones, which, makes for an interesting hunt.
Indeed, a lot of activity, as you said, with some strong bullish narratives emerging. But as always, we've got to peel back the layers and see if those stories hold up against the financial metrics. Today, we've got three interesting candidates to discuss: AMD, NBIS, and USAR. Let's jump right in.
All right, let's kick things off with Advanced Micro Devices Inc., AMD. Our data from yesterday showed a really upbeat picture, Brooke. We saw users celebrating massive gains. Someone even paid off their car with AMD profits in just 4 months. There's a lot of chatter about their landmark OpenAI deal, competitive positioning, and some analysts are even lifting price targets to 270. It definitely feels like there's a strong current of optimism here, especially considering we've had AMD pegged as a stay away previously. This almost feels like a potential upgrade candidate based on community sentiment.
Well, Ethan, that's certainly an exciting narrative, and the anecdotal evidence of personal gains is compelling. But let's temper that enthusiasm with some hard numbers, shall we? Looking at the KPIs, AMD's price-to-earnings ratio is sitting at an eye-watering 127.3. That's a massive premium for a company that, frankly, has a negative operating margin of minus 1.25%. They're actually losing money on their core operations right now. And with a debt-to-equity ratio of over 6.5, that's a significant amount of leverage and risk, too. We've consistently had it as a stay away in past episodes, and these fundamentals just don't scream buy to me for an upgrade.
I get it, Brooke. The PE is high and the margins are a concern. But you can't ignore the market's excitement around their innovation in AI, the big partnerships. It's a growth story, right? People are looking past today's numbers for tomorrow's potential.
Growth potential is great, Ethan, but at what cost? These metrics suggest extreme overvaluation and significant operational risk. The geopolitical headwinds affecting AI chip exports to China also add another layer of uncertainty. For me, the risk far outweighs the current fundamental value. I'm afraid our AI-generated insights still point to a stay away for AMD, despite the recent user excitement.
All right, I hear you. So for AMD, even with the buzz, our analysis is classifying it as a stay away.
Brooke. Next up, we have Nebius Group NV, NBIS. Now, this one is another one generating a lot of buzz. The sentiment score was incredibly bullish from the community, hitting an impressive +8. Users are talking about significant gains, with one poster claiming a 108K gain, and they're even calling it a path to true wealth like Nvidia or Palantir. They see it as a growth stock, but also, interestingly, as a value stock within the AI sector, given its market cap.
Yeah, the energy around NBIS is palpable. Comments suggest it's just getting started, and some are pointing to its fully integrated stack as a competitive advantage over others in the AI space. It's been on our radar before as a speculative gamble, but this surge in optimism and perceived competitive edge could hint at something bigger developing,
Path to true wealth is a bold claim, Ethan, but the KPIs tell a very different story. That value stock claim quickly falls apart when you look at the price-to-earnings ratio, 170.5. That is truly astronomical, pricing in decades of future growth. And just like AMD, it has a negative operating margin sitting at minus 1.058. It's not profitable from its core business. To make matters worse, its debt-to-equity ratio is a staggering 32.427. This level of debt, coupled with unprofitability, spells significant financial risk. We've consistently rated NBIS as a stay-away or speculative gamble in the past, and these numbers certainly don't change that.
Wow, those numbers are definitely stark, Brooke. It's tough to reconcile that level of community enthusiasm with such high risk factors. It really highlights the gap between market sentiment and fundamental performance.
Exactly. For NBIS, despite the strong community optimism and the promise of true wealth, the underlying financials demand a classification of stay away. The risk profile is just too high for most investors.
Okay, let's move on to USRE, USA Rare Earth Inc. Now, this stock stirred up some serious excitement. Our data showed a strong bullish sentiment, largely driven by the strategic importance of rare earth metals and the anticipation of significant government intervention. One user made a 76K YOLO play, and people are talking about government equity investments, reducing dependence on China, and seeing this as a long-term growth play, especially with some recent positive price action. This could be an interesting turn from its previous stay-away status.
Ethan, I understand the geopolitical narrative and the strategic appeal of rare earth metals, but we simply cannot ignore the company's financial health, which is frankly alarming. USAR has an earnings per share, or EPS, of minus 0.79, meaning it's unprofitable. Even more concerning, its price-to-book ratio is a negative minus 23.3. A negative PB typically indicates that a company's liabilities exceed its assets, suggesting a very precarious financial foundation. Both its net profit margin and operating margin are at zero, which means no core profitability. This is a company with a $3.7 billion market cap with zero current financial strength. We've consistently labeled USR as a stay away, and for good reason.
So you're saying that even with the potential government contracts and the huge strategic importance of rare earth, the fundamentals are just too weak to consider?
Absolutely. While the macro story is compelling, investing solely on speculation about future government action, especially when the company's current financial health is this dire, is extremely risky.
All right then. For USRE, despite the geopolitical tailwinds and community enthusiasm, our AI-generated analysis strongly suggests a stay away. Well, that wraps up our stock-by-stock breakdown. Now for our listeners, here are today's candidates based on our AI insights and market commentary. Investigate as buy, none at this time. Investigate as cautious buy, none at this time. Investigate as speculative gamble, Nebius Group NV.
And that's all the time we have for today's Daily Hunt.
Before we go, a quick reminder. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses. The market is a wild place, and knowledge is your best asset.
Indeed. Thanks for tuning in, everyone. We'll be back tomorrow with more market insights.
Happy hunting, and we'll catch you next time.